Ai, mano, o WhatsApp é estranho, tipo, gravar e falar em inglês. Por causa que eu estou sempre habituado a escrever. So, this is going to be a study of the last week from 11 to 15th of December 2023. So with that, this is my first time doing this type of video. I did it for myself. I'll just do a quick explanation why. It's because in the past, I will show you. All I studied like with this, with screenshots, basically. I take my notes and shit like that. But studying for me is getting kind of boring, and I wanna not be bored, so I'm doing things that I don't like to do, which is recording in English, which is not my main language. But hard times, hard things become easier by the time, and trading, not trading and studying price is becoming easy for me, and I'm not a good trader yet. So that's the key point. Studying is becoming not easy but boring to do. So I will try to make it more hard. So instead of only being static charts, I will be talking, explaining my knowledge, and trying to make it as simple as possible because that's my end goal and my goal when trading. It's making simple, understandable, and easy for a child to do the same because that is what it's called mastery, and that's where I want to get to. So this was the second week. This is based by my pre-market bias or pre-weekly bias, where I shared that I was interested in seeing higher prices on on this last week. So it was week 2 of December, and I was anticipating a monthly open high low close. But I will get into that on the charts. So yeah, this was my not ambition, but my bias and drawn liquidity for this week, and keep the same, especially with the SMT and the turtle soup right here. Same thing, same drawn on liquidity, which was making a new high of the here. EM was really close to it, and I think that the EM is going to continue making a new all-time high, very possibly. And dollar, I was anticipating dollar to trade lower into this inversion fairly gap, turtle swooping this OTE. And this is going to be a weekly range study, not a weekly for range foreshadow, which I can start doing as well. But I will see how it goes. So this is going to be like raw. I don't even know if I'm going to edit, but yeah, that's it. So I have my notion here. Let's just jump into trading view now. I have all the charts here, which I usually study, and the XY, which is not what I usually don't start with the XI, like as it's shown here on the notion. The dollar index is the last thing that I look to. I usually start right on ES because that's like my main confluence chart, and I use it for everything most of the times. Like my bias from ES goes into NQ, EM, and then the X, and then I go into the XY, the dollar index, to try to find confluences of my bias for the week. I don't trade the euro. Maybe I will in the future. I don't know. But in this last year, I studied only indices, so that's what I focus on. And then if I'm getting bored of indices, I can go to futures, commodities, whatever I want. But jumping on ES and starting, this is the end of the contract, so it has already expired. It was ESZ, and now we are going into ESH, if I'm not wrong. ESH 2024. But now going to the study. Let's go into First, why was I bullish? Pretty simple. I was expecting this last month of December to be higher prices. So this is the currently 3-month candlestick, which started on October, and I was expecting price to on October to continue on the upside. After seeing October trading lower and having this daily displacement on the upside, I was then looking for higher prices. But let me just uh, yeah, monthly key levels and all. So another confluence to that was that on this, so in easy terms, I was expecting something like this to happen. Then we could possibly go lower, whatever it may want to happen in this week, but I was expecting at least the monthly open high close, so monthly open, monthly high, monthly low, monthly close for a bearish candlestick, and I was expecting at least this high to be traded to. This was my idea for this. What is not showing there? What? Just give me a second. This is stupid. Uh, what is it? No overlapping. I don't know. But I was expecting. Basically, I was buying the monthly Judo swing, which is this right here. This open eye is the Judo swing for the month, and I was expecting this month to trade here. I didn't care if it was a open eye low close of the month, so imagine that instead of this, it was going to be like this, where we open low eye and then close. So all streets go to Rome. It's like a Portuguese saying, but I don't know if it's the correct type of saying. But yeah, that was it. I was expecting price to go higher. Monthly bias was higher. 3 month, which is the quarter, was higher prices after this October low. So everything was telling me that higher prices will be the favorable side, and that the higher prices will be not the correct, but higher probability. So another thing, so I have my monthly drawn liquidity. I have this key level, which is this body. It's not the correct place because I think it's maybe the 3 month. Yeah, it was the 3 month week that I will not go into, but it's basically on the weekly chart. Once we closed above the 3 month premium week cross-cut encroachment, that means that we closed above a premium a premium array on the dealing range from the this was from the Q3, and I was expecting then price to reach up to, because whenever there's like a weak consequential encroachment that is closed above, then we expect the high or the low. What I mean by that, so bullish candlestick, for example, right? We have the week. There's only two things that happen at the week, and not usually at the week, but where is the tool? Right here. No, here. So we trade down to it, and then we probably have the turtle soup here to then trade to the low. This is what happens a lot of times. So yeah, that's basically it. We can go to this eye, but maybe just turtle soup this recent swing eye and then go lower, or then we have the reverse here. But if price closes, so this imagine that it's a 1 month premium discount week. Then if you close at discount week consequential encroachment, if you see price closing in low time frames, then you can anticipate that the weekly low, that the discount week low is going to be traded to. So that was my thought process. Coupled with that, going to the monthly, we can see that we have this order block, and this order block right here, which has this dotted line, was closed above as well. So this was another confluence. That's for higher prices on ES. On the weekly, same thing. That 3-month order block can be seen here with a 3 candlestick order block, and that price closed above it, above cost encroachment, and it now wanted to continue on the upside. So that was the idea. That was the why higher prices were higher probability. That was why as well I was expecting price just continue on the upside and to give me this week 2 Judas swing or expansion on the upside. So I will now mark this right here. So this was the open, high, low and close of the week. And my idea on studying price is mastering these reversals of the candlesticks. So that's my idea, that's my trading model that I'm going to build because I don't have a trading model yet. That's why I mentioned that I'm not a good trader. I'm a good price action studier in that way, but a trader, I'm not a good trader right now. So looking at the other key levels, we have this 2 week key level that as well so was closed above. So all the premium arrays were being closed above, meaning that higher prices will be more high likely. So that was my bias for the week. We had week 1 respect this low, which was I was expecting, but I'm not going to talk about week 1. And now in week 2, you can see that we opened, traded lower, expanded, created the high, and then we closed. Now, why this? What means to have this small discount week and this big premium week? It means that this discount week was made in Monday. Like I don't even need to go to look at the charts, and I know that this low was made on Monday, and this high possibly on Thursday. Possibly on Thursday, maybe Friday because of the Monday low of the week, Friday after the week. But if you want to try to catch an open high low close, so for example, you are bearish, then you expect a bearish candlestick, an open low high close, like this. Expect this. The candle to open, to make the high, trade lower and close. Whereas if you're bullish, you expect the opposite. You expect the open, to make the low, make the high and close. So if you want to catch the biggest part of the candlestick, you want to be buying here. I don't know if you like stop loss here or stop loss at the or at another low, and you want to focus on to making the high. And that was my idea on this week, was to try to catch, not to catch the reversal because I did not trade this week. I'm not trading December, but I'm still studying. So this was the weekly open low high close. With that, not making this too long, let's go lower. So daily chart, and on the daily chart I have some PD arrays right here. I can add the ones that are not needed. So this one it's this one is what the monthly. It's the other block that was closed above and consolidation. The quarterly was the, if I'm not wrong, the quarterly was the, yeah, it was the premium week cost cutting encouragement of the Q3. So now going to the week. What can we see? So I was aiming at this order block on the start of the week. Why? Why was I not expecting lower prices to continue? Like we made this high, we have a buy side pull taken. Why I was not expecting lower prices? Because of everything that I mentioned about the high time frames where everything was indicating higher prices, and that NQ was also with this drawn liquidity pool right here waiting, coupled as well with this fair value gap. So if I was be buying this week, and I mentioned this on the charts on the per week, I was going to buy NQ because of the turtle soup, whereas on ES that is not turtle soup right here at this low. or at this one, if I'm not wrong. So that was why I was using ES as a barometer, and if I wanted to long on paper trading or whatever it may be, real account, I will be longing NQ. So short and sweet on ES. Oh, daily chart. On ES daily chart, we can see that price opened on Monday, made the low into the order block. Why did price, and I was indeed wrong in this case because I was expecting price on Monday to retrace lower. So on Monday, what I was expecting? I was expecting price to reverse at the weekly and daily candlestick on the fuck. I really need this tool. Not this. Yeah, I can. This works. I was expecting price to reverse right here. This was my POI. I was expecting price to trade lower into the order block low, maybe reaching into this opening price on Wednesday of the past week, but that was not seen. Instead, after closing above the order block, which is the previous week opening price, so this is also not the monthly because the monthly opening price is this one, but we can use this one also as the monthly opening price because it's the first Monday of the month. But we can see that the price used the previous weekly open, which is week one, because this is the first week of the month, right here. And you can see that price used this opening price and then expanded on the upside. Where we have Monday opening, low, high, and closing. Then we have Tuesday respecting the Monday low. So this is going to be viewed as a proportional block. So on Tuesday we have the CPI, so that's important for me to go catch the news because I forgot to mention that the news we have. So this is first time. So bear with me, like I'll mention. I think that this was the news for this week. Yes, surely it is. So Tuesday CPI, just a perfect week for manipulation on the markets and for drone liquid to be traded too. And that was what I was expecting. Cool. With that, after the close on Monday, we open Tuesday. We trade lower, higher, and close. And then on Wednesday, we have the biggest move of the week into the down liquidity, which is also the third day, and the third candlestick of the week. So if you know, where price on FOMC just expanded on the upside into it. So I was correct this month, but I did not trade it this month. I'm not trading December. There's no need for it. So what can I see is that inside of this week, I'm gonna just to close the round. Okay, inside of this weekly candlestick, you can see that there are other candlesticks that make this bigger candlestick. What I mean by that, Monday shares the same opening price as the weekly, shares the same low as well because the low of the week was made on Monday. But as I can see, the high on Monday was not the same as the high of the week. So I will just end right now, just continue the drawing. So then we have Tuesday. So the Monday close is most of the times. So the previous candlestick close, it's most of the times the same candlestick, next candlestick open, because sometimes you have a week opening gap or a daily open gap, but that's not important. So then you have Tuesday. Then Wednesday, making this low and expanding. We have Thursday with this more rangy candlestick. Give me a minute. Making the low of the high of the week on closing. And then we have this Friday retracement or intra weekly reversal, reversing the week and closing. So this is basically the drawing of the week. This is basically the weekly candlestick in drawing on bars, and this on bars. If then I will go to the 4-hour time frame and another drawing. On the bars we'll go see something like this. Let me just get the path tool. It's right here. So on the bars we'll see something like this. The open, a Judo swing before the weekly Judo swing, making the Monday low, weekly low as well, and then price just got higher and higher throughout the week, making the high of the week. Before then Friday, trading lower, reversing the week, which is a retracement basically, and closing the candlestick. So if I basically change 4 bars, what I have drawn is basically this. It's just simply the opening, low, high, close. So if I want to be long in this week, I'll need to be buying right here. This will need to be my buying point. Or I will be waiting for an OTE. After making this low and being proven that this is the low of the week, I will then expect the price to maybe retrace lower before continuing. So this is the best place to buy. But then I could also buy in the Tuesday reversal, which is a weekly continuation, and so on, so on. And I could be trying to buy every single low. So I could buy the Monday low, which is the weekly low. I could be buying the Tuesday, the Wednesday, and so on, until my drawn liquidity was going to be traded to. So I'm just going to take a screenshot of this. So this is the best place to buy, and this is the best place to sell. Just after making the high. Basically after Tuesday, on Tuesday, and if the don't liquidity is ready to just sell your position. So now I will not be deleting this, but let's go to the 4-hour and see what we have here. First, I need to take this to the left and make them smaller. Oh, this is... Oops, not this, not this. Okay. So this is Monday, Tuesday, Wednesday, Friday. So I'll make this candlestick just to be more well presented in some sense. Weekly open, weekly low, weekly high, weekly close. Daily open, Monday low, Monday high, Monday close. Uh, Thursday open, Thursday low, Thursday high, Thursday close. So now looking at the week, I really need to make this small. This is like so big, but it is what it is now. Let's just make a little bit of more zoom because zoom is not never enough. Let's just take it to the fucking just delete it. So on Monday, let's now do that instead of the big drawing on here. Let's just note the weekly hope. I have this dealing range, which was the Friday dealing range, and I can see that on Monday we have price opening, trading lower into this fair value gap, which is a low time frame turtle soup. So we have price trade lower and into the order block. after this intermediate term low. So notice that after Friday trading higher, we closed above the weekly open and we closed above this Monday candlestick. And after that, we have this Monday accumulation. We already on Monday, we traded above the Friday high, which is the previous week high, week one high. And then price traded lower, three candlesticks lower. On the 6 for our candlestick, we have this low 32, which is a fair value gap. So it's a key level, and it's also a low time frame turtle soup. And after that, the price trades on the upside and engulfs these three candles down. So this can be viewed now as an order block. So now we have another order block. Now we have a 4-hour order block, which is not a 4-hour, which it's a 12-hour order block. Do you see it? So notice that we have an 1 day order block. So I was viewing this as a potential weekly reversal. And if I go into the 4-hour, right below it 4-hour, I can see that we have these three down close candles. So 4 versus 3, which are 4 hour candlesticks versus like x3 and like 4x3. I don't know how to say it on English, I'm sorry. We have then another order block above it, which is then engulfed. So this proves to me that the low of the weekly is win, and that now this can be used as a buying opportunity as well. And it was what happened on Tuesday. Same thing, 6-hour, 4-hour candlestick into the 18-hour high expansion. And another time, the the down close candlesticks were engulfed on the upside. Wednesday, same thing. Price trading this fair value gap into this old low at 6. At 10, you have this expansion, which was FOMC. So neither trade this, neither trade this. You can trade after FOMC and CPI, 30 minutes after. Depends. Like many people last week caught this NFP low. Many people caught this CPI low. And then the FOMC expansion, but I don't like to trade when there is not. It's not high probabilities, but it's like in some sense gambling. But now there was really the main point of the video, which is the 1 day order block being closed above, and Tuesday proving and Monday proving that it's expanding above it. So if I was looking at the chart on Monday and I saw that we have price expanding above this order block, that we are so close to our drawn liquidity. So now there's only two things that can happen, which is price can go lower into this fair value gap. So Monday expansion, Tuesday retracement, which is basically should the swing of the weekly candlestick and then an expansion on the upside. This could happen, but why was the Monday low protected? First, I had the bias, and usually on the should the swing of the month, the week two, or whenever we're expecting a Judas swing, expect that the first candlestick is not going to be traded. What do I mean by this is that if I'm expecting the monthly candlestick, or if I'm expecting this week price to create a Judas swing, meaning that it's going to expand to the liquidity pool to a key level, then it's a higher chance on indices that the Monday is going to be the low of the week or the high of the week. And this was something that short time. It's basically short time that you start seeing. So after Monday closing above this, we go now, and there's only two chance. Either price continues higher and expands, or it goes lower, weekly reversal at this fair value gap, and then continues. But on the 4-hour, what can we see? Three candlesticks on downside, which is a 12-hour order block, which is also as well creating this 12-hour fair value gap, a busy. And then what we have price expanding and engulfing these three down candles, creating this order block. So this is a 4-hour order block, a 4-hour proportional block inside of an 1-day order block. Now, just write this. Yeah. Just closing this. Then we have the same thing. Expansion. Give me a second. Let me just take this for. So after being proven that 1-day order block is not going to be used, and that Friday dealing range was not going to be used, and that three down close candles were engulfed on the upside, then the same thing we have on Tuesday. On Tuesday we have CPI. Like I mentioned, this is the weekly news. So after CPI, what can I see? I can see that we have the daily open, but I will go into that. So Tuesday we open consolidation because it's CPI. We have at 6 hour for a country, we have price trading higher first and then trading lower into the fair value gap and into the order block. So this was basically, so I'm expecting because of this long week that price from 6 to 8 was trading on the upside. Then we have the Judas swing with the 8:30 news, which is the 8:30 CPI, and then we have the reversal for the daily candlestick. So in an easy way to looking at this, I will be looking at candlesticks right this, just like this. So this is for Monday. This is for Tuesday. This is for Wednesday. Friday, Thursday and Friday closing the candlestick. 18, 18, 18 and 18. So Monday, like I mentioned, the first 12 hours of Monday, creating this retracement into a fair value gap, which is also a 12-hour fair value gap, which is then engulfed. Price on Tuesday opens, create this manipulation. So we have a Judas swing on the upside before the daily Judas swing on the downside into this fair value gap and into this 12-hour order block, which was engulfed, and then I have price expanding on the upside and closing the Tuesday candlestick. After Tuesday candlestick being closed, we have the opening price of Wednesday. Consolidation, consolidation, consolidation throughout all the day because NFP. After that, we have equalized made previous NFP and price trades lower into this fair value gap and this old low, which is then followed by this expression. So I think that if you enter here, so if you have like an open position from here, expecting price to continue, that's fine because price can actually reverse on you, but it's not going to be that bad. But if you enter here like with a stop loss like this, I think that you're actually gambling and it's not the best thing that you can do. So on Wednesday we have price creating the expansion into the drawn liquidity, and after this drawn liquidity we just can check for some deviations, standard deviations, like for which was traded to a 6 at 5, which was basically the after week, but this is hindsight. Don't it's not going to work all the time. This is literally hindsight. I'm just now looking how could I catch the eye of the week, but I'll be pretty happy to have the item from drawn liquidity traded to, and that was going to be my trade for my also trade for this week. Then Thursday and Friday, no need to trade. Why no need to trade? Look, just look from this low. Let me get the price tool. So from this low to this high, look how much it moved. Just look 2.2 400 if 445 pips, 111.25 handles or points. Then look at these last days. 45, which is not bad, but it's not that hyperbolic. So look at after this expansion, we are followed So after expansion, we are now followed by consolidation. And that's what we are seeing right here. So there's no need to try to engage on Thursday or Friday. This Thursday and Friday, after CPI and after this expansion on the upside, is just for gamblers and for retail traders to try to chase price and try to enter, expecting price continue on the upside. So this is why on Thursday and Friday, we have price consolidate a little bit. Going to the 1 hour and finishing this. We can see now I'll be using there's a thing that I'm studying, which is when should I use the midnight opening price and when should I use the 18 opening price, which is I'm always confused about it, so that's something I'm studying. But making it be 12 for the sake of this, now without the rectangles, I'll be using the bars, which is easier to look at. And I'll be right ending this because I'm talking a lot and there's no need for it. So on Friday we close at 9. No idea why. What happened for us to close at 9? So what can I see? Monday retracement into the 12 hour. Not a 12-hour low because 12-hour low was this one. But into a 4-hour low, which is better than enough, which is also a 4-hour BZI, which is a very important key level to look up to because you have to look at on the BZs the best place to sell to buy on the imbalances better. The best place to buy. So if you want to buy the BZI and expecting it to be a turtle soup, if you want to sell buy the CB low, expecting it to be a turtle soup. So on the 1 hour and ending the weekly review. So Monday little bit consolidation, retracement, weekly reversal. So anything below this opening price was a great opportunity for buying. This was a place if you want to accumulate. This is where smart money was accumulating. After that we have this intermittent loan taken, price turning into the rejection block. Before continuing, which I think it's important to mention because it's a rejection block inside of a 4-hour proportion block or 12-hour proportion block. And coupled with the 4-hour busy as well. So if I just note the busy, I don't want to have like all PD arrays because let's get messy. But you can see that we have this order block inside a 4-hour, fair value gap inside, and add a 4-hour, 12-hour proportion block, which is this one. So there are a lot of nested discount arrays where on CPI price trade to at the 9-hour candlestick create the reversal of the on Tuesday. Expansion, we have this expansion price then uses this breaker as well as this fair value gap. So here's your unicorn model, like they call it. Expansion, consolidation range before. So we have this equalized before NFP. NFP trades lower 1 time, 2 times, 3 times, 4 times into this fair value gap, which I was actually looking. Like there's no need to show it because I did not trade it, and as well as there's not no need to trade it, but it's like a gamble to trade before it, in my opinion. So that's it. So FOMC expansion, use this round liquidity as like a support higher, and then you have this range bound consolidation basically. You have this eye of the week. So close, eye, close, eye, open, low, and then that that big bar that you see, it's everything that happened inside. So everything that is happened inside. So you want to buy, oops, you want to buy right here for the Ozok, or you want to buy at this OTE from year to year. That's the only places you want to buy. After that, buying here is, I think it's a gamble, and trying to do something here, it's chasing price. After all it's have done. So then Thursday we have the eye of the week at 9. So notice low of the week 6, 9. We have here SMT. Then we have price. Come here and make this high at 9. 12 with this double top, which is then taken Friday before turning it lower, and so on, with this little range, which now is going to accumulate a little bit more, in my opinion. So this was for ES, and if ES is like this, same thing is on NQ, and NQ was higher probability because of this turtle soup. So as I can see, you have this turtle soup right here, and this turtle soup right, and this, so not turtle soup, failure swing, turtle soup, and expansion. So if you want to buy, the best place to buy was NQ. So that is our NQs more, not more explosive, but more consistent on the deliver on the upside. So on the 4 hour, you can see that it was easier for us to buy, like fair value gap here, another fair value gap here, another fair value gap here, and so on, so on. And I think that we can probably going to continue. I think that we already traded to the eye of the an all-time high. So that's it on EM. There's no need because we're so close to it. Only just expanded into it. And the XY ending it as I use for confluence and use it for a lot. Why was I expecting this total soup? Because every ICT pattern trading was buying this low. Everyone is buying this, and you could be buying this low only into this high. If you bought this low into this fair value gap, okay. But now you have what? We have range range high taken, range low taken, and now I expect price to expand on the upside. So what? Oh, okay, that was black. That was bad. So now I expect price to do something like this on the upside. So this is just me talking and doing the weekly review. It's for ES, not for anything more. And with a little bit of a touch of what I master and where I want to get good at, which is open eye loan close. So I think that's all. This is my first time trying to do this, so it's pretty awkward. And that's it.